Hey everyone, Lorenzo here. I am here at Elite Lending Corporation, and today we're going to be talking about mortgages. And the reason why we're talking about mortgages is in Vancouver, people are still very much interested in purchasing real estate. But the thing is, the banks are making it tougher and tougher for people to qualify for mortgages. So I'm here with my good friend, Jeffrey Ho. He is the senior partner here at Elite Lending Corp. He's been in the mortgage industry for about, how long has it been? Since 2011, right?
7 years.
7 years? Oh,
Yes.
geez. So you were like 12
Yeah.
when you started, right?
A lot older than I look.
Yeah, pretty much. Yeah, you've got quite the years of experience in the business.
Yeah.
And Jeff here has his company, so has been running his own mortgage company now for the past 3 years, and he is an expert of getting some pretty tough deals through. So today we're going to have a quick conversation, and hopefully you're going to learn some tips. If you are a recent home buyer or will be purchasing a home pretty soon, so hopefully you get some tips on how to make sure you qualify for a mortgage. So Jeff, tell us about some of the things that are going on right now. Why is the banks making it tough? What is this stress test that they have? Like how does that work?
Okay, so as of January 1st, 2018,
Yep.
the banks have introduced a new stress test. Basically, the stress test is to qualify 2% higher than what the actual bank is offering you.
Mm-hmm.
So for example, if the bank's giving you a rate of 3.19,
Okay.
okay, you have to qualify at 5.19.
I see.
And the reason why is because the bank feels that the rate's going upwards, so they want to make sure that the borrower can sustain the higher mortgage payments if the rate does go higher.
If the rates does increase, I see. So they're playing it pretty conservative.
Yes, exactly.
Okay.
Yeah.
And who is this affecting? Is this affecting, because there's been 2 announcements, does this affect people who have less than 20% down or people who also have 20% down or more?
So this new rule on January 1st, 2018, it's actually affecting those who can put more than 20% down.
I see. So it's affecting both. So whether you have less than 20%, whether you have more than 20%, you're going to be affected by this.
Yeah. So if you put less than 20% down, you've already been affected. You had to go through the stress test.
Right.
But as of January 1st, 2018, anybody who put 20% or more down gets affected as well.
Got it. Okay. And how do people make sure that they have enough income to qualify? Is there some sort of way that people can see that, okay, this is the home that I can purchase and this is the amount of income that I should have to afford that purchase? Like,
yeah,
what sort of general guideline do you give to your clients?
So, talk to a mortgage broker.
Yeah, okay.
That's for sure.
That's you?
Yeah, that would be me.
Okay, yeah.
And as a general rule of thumb, you can borrow around 5 times your annual salary, assuming you have no debt.
Right.
So for someone who's making $100,000 a year before tax,
Yep.
you can borrow around $500,000. There are ways you can supplement your income, so you can have guarantors to help guarantee the mortgage.
Okay.
Or if you find a property with a income generating suite,
Right.
then that can add towards the income as well.
What about the people who are borderline, or let's just say the people who are just about to purchase a home,
Right.
So they're filling out their mortgage application, or before that process. What sort of advice do you have for people who are just about to fill out that mortgage application? Is there anything that you can do to help your clients be more prepared?
My recommendation is always get pre-qualified before looking for a property.
Right.
So as a mortgage broker, we have access to 40 different lenders.
Yeah.
Yeah, and every lender has their own niche market that they want to capture.
Okay.
So a bank might be interested in new to Canada, so they might have looser guidelines for new to Canada.
Right. Makes
Some
sense.
banks may want their self-employed portfolio to increase, so they might be looser for self-employed people to obtain a mortgage.
Yep.
So as a broker, depending on what type of borrower we have, we will place these borrowers in different banks. And we can also help them qualify, pre-approve for a mortgage before they start looking for a property, so they know exactly what they can approve for.
Right. Okay. So get pre-approved for a mortgage, and I also hear that there's probably certain things that you don't want to do. Perhaps like take on more credit or
for sure.
get a car lease, get a car loan.
Definitely.
How does that affect the mortgage application?
Yeah, because when we qualify for a mortgage, we look at the total debt versus the total income.
Yep. Okay.
So even though after you get an approved mortgage, if you accumulate additional debt, that's going to affect your application.
You know, I realize I've met multiple mortgage brokers before, and my experience of all mortgage brokers are not the same. And you know, how do they differentiate? How does one mortgage broker have an advantage to another? Can you chat about that a little bit?
Definitely, yeah. So as a mortgage company, we have different contracts with different banks.
Yeah.
And
okay.
depending on what kind of brokers you have, what kind of clients your brokers are dealing with,
Okay.
Different banks will give you different contracts.
Yes.
Yeah. So if you don't have enough, say, self-employed clients in your firm,
Okay.
then those banks may not give you a contract to deal with them.
Oh.
So at
interesting.
Elite Lending,
okay. Yeah.
because we have a big diversity group of brokers that deal with many different types of clients,
Yeah.
we have
Self-employed,
exactly
business owners.
Yeah.
Yeah.
New to Canada,
New to
foreigners,
Canada. Yeah,
right, first-time home buyers.
Yeah. Right. Okay.
So we have contracts with many different banks.
Ah, I see. Okay. So there's probably certain contacts or contracts, but you also have probably quite a bit of connections with underwriters that you developed through those years. That helps you, fund the deals and make sure that the deals finish timely.
Yeah,
right?
yeah.
Whereas,
this goes with any business.
Yeah.
If the relationship is there,
Right.
then it's easier to get things done.
Awesome. Well, Jeff, is there anything else that you want to say to clients out there? Any sort of advice that you can give them? Is there anything else?
Yeah, this might sound funny, but getting a mortgage approved is not everything. Okay, so
Right.
there are a couple of things that I have seen throughout the years in this industry that people are doing, and they shouldn't be. And number one is they are taking time off.
Time off.
And going on vacation
right.
before completing a purchase.
Okay.
Yeah, so make sure you complete that purchase first and then go on vacation.
Right, and that has to deal with the income?
No, if you go on vacation before completion, then
Yeah.
all of a sudden we have to rush everything to
Right.
get everything done before you leave town.
Oh,
Yes.
I see.
Yeah,
yeah.
and the
that
other
can be
thing-
pretty common here. That can be pretty common here.
Yeah, Vancouver people, they like to take time off and they like to go on vacation.
That's the West
I
Coast
understand, exactly, right?
Right.
Yeah,
Okay.
yeah. But make sure you get the mortgage complete first before you take off.
Awesome.
Yeah.
Wow, this is awesome advice. So hopefully that helps you guys, for you people who are just about to purchase your home, needing a mortgage. Hopefully this helps you be better prepared. Now, if you have any questions, there's Jeffrey's contact below. Feel free to give me a shout as well. And for all viewers out there, thank you for watching. See you again soon.
Thank you.